I wanted to do a quick update on the uranium stocks because a couple of interesting things have happened over the past week. First of all, we saw a gap down in Cameco last week after it reported worse than expected earnings and a loss for the fiscal year 2016. And essentially, Cameco took a big write down on its assets because of depressed uranium prices, and mining companies typically take those write downs when the underlying commodity that they're mining is in a bear market. We saw the same thing happen to gold miners um, across the board heading into the bottom in the gold mining stocks in early 2016. A lot of the gold miners took massive write downs right before the bottom. But anyway, on the daily chart of Cameco, we see that it gapped down on heavy volume last week. And what was interesting was the following day, it basically recovered the entire uh, red candlestick from the previous day, but it didn't really penetrate the gap at all. And then we've seen, starting this week on Monday, Cameco's price action is starting to move back up into the gap. So on a daily chart basis, the action is a little bit bearish because of how much the volume was on the day of the breakdown. But it wasn't out of the ordinary to see Cameco or some profit taking in the stock because of how high it's ran over the past 3 months. You've seen Cameco almost double in price, and definitely a pullback was probably going to happen at any time. And Cameco was running up against resistance from back in early 2016. But looking at a weekly chart of Cameco, really nothing really looks wrong with this chart. You see the big volume as Cameco broke out above its 30-week moving average, and pretty much a clearly defined stage 2 breakout here. And even with the negative week last week, you see how the price action remained not only above the 30-week moving average, but above that secondary moving average I use, which is the 50-week moving average, which is kind of like what I use as the last barrier between fake bull market rallies and potential real bull market moves. And notice that, again, it's holding above this moving average, whereas over the previous few years, that moving average served as resistance on these bear market rallies. So as long as Cameco holds above these moving averages and they continue to curl upwards, I don't think there's really anything wrong with this stock. Now, the second interesting thing that happened over the past week is really what happened today in the uranium mining ETF URA, where the volume on this ETF was really off the charts for a day. URA did 1.6 million shares, where the average volume for a week is still running not even a million shares. So if this volume keeps up for the rest of the week, you're going to see potentially 7.5 to 10 million shares traded in URA if this continues. Now, I don't know if that's going to happen or not, but it's something to watch. And again, like I've stated in many previous videos I've done over the last couple months, this looks like a bona fide stage 2 breakout with the stage 1 base here, and then the volume just continues to come into this ETF. And to me, that's really a sign of big money coming into this sector, because this is the most diversified way to play the uranium mining stocks, and there really isn't a good way to play these stocks given the fact that as far as large cap stocks go, Cameco is the only really large cap stock that's traded on the US stock market, and the rest of the uranium mining stocks are kind of smaller cap producers and some explorers. So I think this is a good way for the big money to get into the sector, and I wouldn't be surprised at all to see the average volume on this ETF start to move to a higher level if this bull market keeps progressing, because obviously the interest in the sector was hardly there at all back when the uranium was in a bear market. but once things move into a bull market, you tend to see a lot more participation, obviously. Now, other uranium miners, some of the smaller cap ones like UEC, even the fact that Cameco had a down week, it somewhat impacted some of the other miners, but these stocks are still holding up extremely well given how far they've run. And what's interesting about this stock in particular is that they did a financing and actually increased the amount of their financing to like $26 million, which is like, I think, about 1/5 of their market cap. And the price of the stock is still trading above the financing, which typically when you see a financing that big, the stock price will head back to the financing price or maybe even slightly below it. But given the fact that they've diluted that many shares and the price has stayed up this high, I think that's a pretty bullish consideration that the market's absorbed all those shares yet remains at a higher level than the recent offering. The same thing goes with URRE, where they did a financing around $2.10, and this stock is still trading at $2.39 as of the close today. So again, demand in the sector is seemingly overwhelming even secondary offerings by some of these mining companies. Now, Uranium Participation Corporation actually broke out to a new high today, and the daily volume for this ETF, or so far for the week, was pretty solid. So this tracking fund might actually do above average volume again, which is bullish for uranium. One last uranium mining stock, NextGen Energy, pretty much one of the strongest stocks in the sector. Notice how it too had a down week last week, but it shook off most of that damage and is already almost approaching new highs as of this week. So overall, the uranium mining sector still looks like a stage 2 breakout. I think there's no way you can look at these charts and not see exactly what we're showing here for an ideal buy point in stage analysis. To get more information on stage analysis, I recommend going to my website at nextbigtrade.com and checking out my stage analysis page. And also see the disclaimer at the bottom of this video. And full disclosure, I am long URA UEC that I mentioned in this video.